All right, everyone. Welcome to the roundup episode of On the Margin. I'm your co-host and one of the co-founders of Blockworks, Michael Ippolito. I'm joined, as always, by my intrepid co-host, Mr. Tyler Neville. How are you doing this week, Tyler?
Intrepid, huh?
Intrepid. I
like
signed a
that.
new adjective to you.
Yeah, there you go. That's your Emory education at work.
Exactly. Yeah, I don't mean to flex, but it's my SAT vocab word of the week.
I love it.
Just to give our people who are tuning in here an overview, we're going to be talking about some pretty cool stuff this week. It was a bit of a quiet week in macro land, but we are going to be talking about kind of the stalling reflationary trade. It looks like the yield on the 10-year is backing up, so we're going to get into that. In crypto world, we're going to be covering the Fidelity's filing of a Bitcoin ETF. We're going to be talking about the continuing to fall GBTC premium and kind of a slowdown in demand on the institutional lending front. And then finally, we're going to be talking about sovereign wealth funds. It seems like there's some interest. They're sniffing around Bitcoin, which I will give you credit. You have brought that up in newsletters in past weeks. So it's a good call on that, Mr. Neville. Very well done. That's why you get intrepid. That's why I'm calling you intrepid.
Yeah.
You boldly staked that claim, and I think it was a good one. Before we get into that, are you sleeping any better this week? Do you show your kids any more Ninja Turtles?
We turned down the Ninja Turtle action, turned up the reading action, so he's sleeping a little bit better. But I have another problem is my internet's been pretty touchy lately. So I have like a 10-second delay on like Zoom calls for some reason, and it's driving me absolutely crazy. Like you talk over one another left and right. It's miserable.
There's no better way to ruin a call than with a delay. Or like, I can't hear you. Oh, what's that? It just ruins the calls.
Yeah, it's the first time it's happened since the pandemic, and I'm just like going nuts. I'm like, let me just call your cell phone.
Yeah, man, I'm a big fan of still. I feel like it's an old-fashioned thing now, but just picking up the phone, calling. The Zoom fatigue is real. It's
It's real. It's
a real thing. Yeah, absolutely.
And like sometimes I don't know if this happens to you, or I'm just like, my face gets stuck because you're like smiling. You're like, and then you're like, I've been smiling for 30 minutes. Why?
I'm trying to be engaging here. Yeah, I'm trying to be engaging, but
I don't know.
There's only so much, especially if you've got back-to-back calls. There's only so much smiling one can really do. I think. Yeah. Like I'm only so happy to be chatting with you here. All right, let's get into it. So stalling reflationary trade. So the 10-year yield is finally starting to back up a little bit. Its peak was at something like 1.75%. We're down around 165 basis points. And it seems like that reflationary trade, which was all the rage for the last couple of weeks, is slowing down. Can you give us just an explanation about what's going on here?
Yeah, I think we just went too far too fast, and we saw like a 4 standard deviation move outside of the norm in 10-year yields rising, and now we're just consolidating. That's the bottom line. But there is something below the surface that I have on my radar, which is the dollar is actually rising slowly. Like it's not rising incredibly fast, but like it's consistently been going up. And if you look at the Japanese yen and the Chinese yuan, both of those are selling off, which kind of leads me to think like, okay, is there inflation in China and Japan? And will that lead to deflation in the US? Because essentially that causes a stronger dollar, right? So those are the things on my radar a little bit longer term, but topically you'd expect, okay, we got, the Biden administration is basically saying we're doing a $3 trillion infrastructure plan. We're printing 120 billion a month. That's 1.4 trillion annually. You'd be like, superficially, the dollar should probably be annihilated, And we're not seeing that, which gives the Fed even more power and fiscal authorities to juice this thing up even more.
And you've called out in several of the newsletters this week, and I saw you tweeted out as well that you're kind of watching for a potential credit crisis or some backups in the credit market. What's going on there?
Yeah, I mean, I just think credit was priced to perfection. I wouldn't call it a crisis by any means yet. Like we're still on the lows, but I just don't see how we can go higher from here, where if credit spreads were super tight, rates were at generational lows. I think we're edging towards a credit widening, credit spreads are widening, and things are getting a little bit weaker there. If it's a crisis, you got to watch the dollar, because the dollar will tell you if we're heading into a super deflationary environment. And if you get the dollar strength, bonds selling off and stocks selling off, that's sort of like the holy trinity of like get the hell out of assets.
Yeah. And you mentioned, do you think that's what's going on right now? Because, kind of both stocks and bonds are taking a dip. So people are kind of looking at their portfolio and saying, whoa, I'm losing money, and moving back into the dollar. Do you think that's playing a role here?
Yeah, a little bit. I think when when you see both your stock portfolio and bond portfolio sell off, you're like, oh my God, where do I go? And gold's not even working, right?
No.
So that's kind of funky. Bitcoin is. And I think you're seeing institutional investors being like, all right, well, okay, the Fed's going to keep this thing going. The fiscal authorities are going to keep this thing going. I might as well move into digital assets, because if these other things have topped out and it's looking like at least tech is topped out, I think you're going to get a rotation into the value stuff, which is happening below the surface. Those things are increasingly making higher lows or lower highs. And so that stuff is rotating under the surface, but like the tech that was outrageously priced is still kind of getting pounded, and I think that's going to happen regardless.
Gold's an interesting thing to bring up here as well, right? So gold's been moving lower. People are confused about that, but really gold responds and pretty much inversely tracks real yields, right? So when the 10-year was moving up, I guess it's not a real surprise that gold was moving down. I guess it would be interesting to watch as, like you were saying, maybe we're starting to see that trend reverse. What happens with gold and how does it respond? You'd think it would be positive, but I guess we'll see.
Yeah. The gold narrative is really interesting. Is I used to think that you could hold both gold and Bitcoin. And I still don't think gold is dead by any means, but I think there is some allocation from those people that did hold gold into Bitcoin now. If they're like,
Yeah.
okay, wow, it's got the gold story, and it's becoming less of there's a less of a stigma attached to digital assets. In fact, if you don't own them, you're probably going to be left behind. So you
Yep.
might be getting that $10 trillion to $1 trillion ARB a little bit.
I also, for the longest time, and I own both. I own both gold and Bitcoin. And for the longest time I did think there was a place for both of them. And now I'm starting to walk that back a little bit, and I'm starting to be more bullish on Bitcoin. And so the episode of On the Margin that's coming out on Wednesday was with Grant Williams, who I know brilliant guy. It was a great interview. You should all listen to it. But he's a big fan of gold, and he laid out the argument in a very succinct way. And when I listen to guys like that, and guys like Dan Tapiero is another guy who thinks there's a place for gold and a place for Bitcoin. But I think the way that I think about it is, gold feels like the analog version of that. They're being used in the same sentence now, right? They're a debasement trade asset, and it feels like Bitcoin is the digital version of that. It also feels like there's just momentum behind that. And if you're kind of thinking, look, this is what I think is going to happen in the world. I think that governments are going to continue to debase their currencies. Saying, well, I could put my money in Bitcoin and maybe I could see huge upside, or I could put my money in gold and see some modest upside. I just think that, Bitcoin actually is going to end up eating a lot more of gold's market share than we think. In
Yeah,
that
I think
debasement scenario.
in your interview with DTAP, Dan Tapiero, he basically said if you look at like the M1 money supply and M2, it's kind of a crazy move. Like that's parabolic, right?
Yeah,
And relatively, you see that, then the Bitcoin move does makes a lot of sense, right?
yeah, yeah, it does. And we talked about this on the Michael Saylor interview this week as well, referencing a lot of Blockworks interviews this week. But when you look at something like the hockey stick that Bitcoin has been doing recently, it's very tempting to just look at that and say this is clearly a bubble. But it kind of depends on your frame of reference. And I think you could look at that Bitcoin price and say, this is actually reflective of an adoption curve in Bitcoin. You could also say, this is reflective of record debasement of, the US dollar. And if you look at there are two pretty crazy charts out there. The one crazy chart is if you just look at the price of Bitcoin denominated in US dollars, and it looks like it is, shooting up, looks nuts. But look at the growth in the M1 money supply and M2. It's nuts. It's insane. It looks like a fake chart. But it's coming out of, Fred, down in St. Louis. So
we are living in a post-truth world where like the inputs, if you divide it by, Raoul Pal says this is if you divide it by the Fed balance sheet or any other, global central bank balance sheet, things look kind of like steady. It's like a normal line. But and this actually gets into something I wanted to bring up, which is all the monetary policy has basically pushed up financial assets. And I saw a tweet from Chamath Palihapitiya I kind of want to read here real quick. He said, "Here's something I learned today. 1979 was peak inflation. It was also when the gap between the rich and the poor was the smallest. It was preceded by a big wealth inequality between rich and poor like today. Solutions started in 1960 with LBJ's War on Poverty. By investing aggressively in infrastructure, social programs, and economic safety nets, even the starting line, as poor started to earn more, they spent more, driving commodities and inflation. The rich did less well because financial assets were worth less. The gap between rich and poor closed aggressively. The big realization for me is government spending leads the way, not private capital and markets," which is like something that I've brought up before, which is we're just in a giant rotation back to labor from capital. And I think everyone realizes monetary policy only really helps capital, which is people who understand debt and financial assets and all those things. And now we're seeing that huge shift towards the fiscal, which
okay, help explain something to me here though, because there are two very competing viewpoints, which is exactly what you just laid out, what Chamath said, which is inflation is kind of a reset and it acts as a de facto redistribution of wealth because financial assets, which the wealthy tend to own, go down, and wage inflation, wage kind of power goes up, right? So you kind of have people meet in the middle. And people kind of throw this around and say, hey, we'll let inflation run hot and it'll kind of solve the inequality problem. And then you've got other people that say, well, that is complete baloney because when there's inflation in an economy, it means something is drastically broken. It means CPI, right? So it's like core things that people need to live, namely the price of food. That's going way up. That's less affordable for people that have a lower income, and that would be bad. That would be really bad for the people on the lowest rung of the income ladder. So there are two very different narratives that are kind of out there right now concerning inflation. Where do you fall on either one of those lines?
I just think it's a giant cycle, and if here it's very political, and I try to like keep in mind that I think we just went too far in the capital side where everyone got the benefit of disinflationary environment that's in the 1%, and to deny that is kind of crazy. And you didn't really have the wage inflation. Like that's the funny part is, and this is a generational thing, but I used to joke around is like, I was working for a guy who barely could open a PDF, but got paid, 5 times as much as me. And like the wage inflation isn't there. There's no meritocracy at giant mega corporations anymore because it's playing not to lose. And I think that whole system is going to come back to help the millennial and Gen Z population in the fiscal spending realm. So that's sort of where I'm at. But like, if inflation gets too crazy and like the handouts get insane where like economic growth starts getting awful, I'll lean back in the other direction. Like there's a nice balance in there somewhere of like helping have the government create infrastructure plans that help future growth. And then instead of just, everything, here's the other thing that what tech did for the past like 10, 12 years is in a disinflationary environment, all they did was feed social media and create like all these problems for the next generation where instead of like, I can't get to London faster on an airplane. Like there's no like super technologies maybe Elon Musk, what really changed besides like, oh, Amazon gets to my door within 24 hours. Like that's pretty cool, but it was all based off the consumer instead of like, making other things better.
Yeah, I agree. I think a lot of this comes down to business models, right? Like, if you look at the companies that really succeeded in Gen 1 of the internet, it was ad-based business. The ad-based business model won out in the
Mm.
internet. And I think there were a lot of negative externalities that arose from that. And even if you just look at, people getting whipped into a frenzy on Facebook and Twitter, the inflationary content is promoted on those algorithms. And I think it's just negative overall. Imagine being in middle school right now. I watched this movie the other day. It's called like Eighth Grade or something, or being a
Mhm.
kid. And, it follows this eighth grade girl, and she's on Instagram all the time and looking at her friend. Middle school sucks, man. It's hard enough. I can't
Yeah.
imagine what it would be like if there were kids, posting these manicured photos of themselves. Oh my
Yeah.
God. I'm not built for that. I'm
I,
not
I
built for that.
agree. I agree. Yeah,
Becoming
it's
an
something
old
we've
man.
we've moved so internal as the support for community has kind of rescinded. Like
Yeah.
I remember I used to go to like I don't know community events and like people don't do it anymore. They do it online, and I don't know. I think that's
They do it
humans
in
are by
Clubhouse. They
nature.
have unfettered conversations on Clubhouse.
Yeah, yeah. And like, what's funny is my network, my community is like podcasts now, right? And that's what's turning into like, okay, my ideologies are similar to these people that I listen to and follow, and that's my network that makes me feel good about humanity and alive. Whereas, like, if you use it in the poor way, which is just like social media superficiality, like that's awful, and I think that's the majority of the next generation.
Yeah. All right, let's move on to this next story
Yes.
here. Let's talk about Fidelity. Fidelity is filing for a Bitcoin ETF. Going to give you a little bit of background here on this. So Fidelity, it's the sixth recent filing for an ETF. So Fidelity's in good company. They're with Wisdom Tree Investments, Van Eck Associates, NYDIG Asset Management. That company is going through a renaissance right now. Valkyrie and First Advisors slash Skybridge. The fund would be called Wise Origin Bitcoin Index Fund 1. And it would make use of Fidelity's in-house, yeah, I know, great name, in-house Bitcoin price index, and Fidelity Digital Assets would be the custodian. So I think obviously it's big news. Fidelity's giant. It's great that they're filing for Bitcoin ETF, but I think the real dynamic to understand as a play here is that this puts the SEC. The SEC is just in a weird position at this point with Bitcoin ETFs, because usually when an ETF application is filed, there's no guarantee that that ETF is going to be successful, right? But now you've got GBTC, which if that it's got $40 billion in assets, right, in Bitcoin. Is the de facto Bitcoin ETF that exists. You know that if a Bitcoin ETF popped up, it would be successful. So the SEC is in this weird position where if they choose one provider, then they would essentially king make, right? And the SEC doesn't want to do that. So they're in this weird position now. I think overall, our managing editor, Liz, she talked to Scaramucci, the Mooch, the other day, and he thinks that they're going to approve a batch all at once to kind of avoid some of the bad press. What do you think about everything that's going on here?
I think you better have good branding because that immediately became a super commoditized space. You know,
Yeah.
I think Bitwise is doing it pretty smart where they at least have a couple different products and, Barry Silbert is branching out into, a couple other ones. I think he's, doing like this decentralized trust and the basic attention token trust in those ones. So if you're just doing basically Bitcoin, that just went from being like, you had a moat around it to complete no pricing power. And you're competing against Fidelity, right? Like who is already offering free services to buy their funds. So I don't know what happens to the other ones. It's really hard.
Yeah. It's a tough game to be in. You don't really
Yeah.
want to go up against Fidelity. You know what's funny? Eric Balkinus, that guy over at Bloomberg, their ETFs guy, who's great, was the first one that kind of called it to attention how important the ticker is on
Hmm.
Zoom.
Oh yeah.
So I guess it's going to be a race to see who gets, is there a coin? I feel like there's a coin ticker or something already out there, but
Yeah.
might be
You got to
VS
come up
point
with something
fees.
witty.
You got to
Yep.
come up with something witty. Yeah. What do you think the best ones are? Bit, I guess, is that people are going to try to do that one. Probably already
Yeah.
exists. I should have looked at this beforehand.
It's going to be exciting for sure. But I mean, hey, for the consumer, this is where
Moon. Moon.
you
Oh,
you
God.
gotta love it. I
It's
don't know.
cheesy, but I feel like that would resonate, actually. Moon would be a good one. I
Yep.
interrupted you with my
No, no, no.
with my naming preferences.
You're brilliant, dude. Just let it go.
No one's called me to ask me my input on something like this. That's shocking.
That,
Give me
yeah.
a call. My number's in my email signature. So, um, but you know what? It's ridiculous that it hasn't been a Bitcoin ETF has not been approved, and we're going to get into this because we're going to talk about GBTC and some of the problems that are going on there. But it is kind of ridiculous that it hasn't been approved. And I feel like when people think about ETFs, they think about, well, these very popular ones that everyone kind of knows, the ones that track the S&P 500 or the NASDAQ and ETFs like that. But that's not true. There are very obscure ETFs that track weird assets. I actually looked one up so I could give a good example here. There is actually an obesity ETF. Like we talked about, ticker is Slim. It's a great ticker, good
Yeah.
branding.
Oh
It was
yeah.
approved in 2016. It's got 12 million in AUM. Here's what it does. It invests in companies that are positioned to profit from servicing the obese. So I'm not picking on this. I'm not picking on this ETF. All I'm saying is that if we have an obesity ETF, we should have a Bitcoin
Yeah.
ETF.
That's
It just
very fair.
that just seems fair and it makes
Yeah.
sense.
I mean, some of the products that are coming out are just insane. Have you seen the SPAC chart of like the amount of SPACs out there looking for acquisitions?
No.
It's crazy. So that likewise, I think if you're gonna go buy like a somewhat private company at a ridiculous valuation, whereas like Bitcoin, it's been around 10 years, the best performing asset since its inception. I just think it's crazy that there's not one relative to what's going on in like other parts of the market. You have Chinese companies that after 10 years, they're finally like, they're just Chinese frauds, literally trading on our US markets. And we don't have a
Yeah.
Bitcoin ETF.
It's ridiculous.
Yeah.
Well, so what it seems like the concern is around is there are basically two kind of requirements that need to be met, which is that one, Bitcoin, there needs to be proof that it's inherently resistant to fraud and manipulation, and second, that for any exchange listing, the ETF enters into a surveillance agreement with a regulated market cap of significant size. The surveillance agreement seems to be okay. It seems like what the SEC is getting hung up on is somehow proving that Bitcoin is inherently resistant to fraud and manipulation. I don't even know how you do that. I'm not sure if anyone out there is an expert on this and understands the technicalities of what the SEC is looking at. Give me or Tyler a shout because it would be great to understand what the rationale is being given for why this hasn't been approved yet.
Yeah.
And
I'd love
it's
to know.
important. It's important. It's because our friend Jeff Dorman at Arca wrote this great article on this, and maybe this will transition us to our next topic here. But the danger on products like GBTC, which I'm not taking digs at Grayscale or DCG, big fans of those guys, but if there's a premium, that is somewhere between 15 and 40 or 85%, you could have bought GBTC, at the beginning of this Bitcoin bull run and barely made any money, or you would have underperformed the underlying asset of Bitcoin by a couple 100%. I mean, that is significant, I think, to point out.
Yeah.
So
And now, when they do open up a Bitcoin ETF, which I think is inevitable,
me too.
as liquidity is now there, it's $1 trillion asset class.
Yeah.
But, there is still an ARB opportunity around that GBTC product as well. I think if it's trading at a 14% discount and it's 10 today, you can buy GBTC and then short the spot Bitcoin and make a riskless profit. So it might turn into just, taking the fees into into the product, there's still an ARB opportunity there, and it just creates a better ecosystem having more products. That's just what scale does, right?
Right. Great transition into our second kind of story and what we're looking at here. So let's talk about GBTC. So GBTC is now trading at 14% discount to NAV. And a potentially related story is that BlockFi has decided to lower its interest rates on Bitcoin. So the context that we were just talking about, right, is GBTC. It's a trust structure. It's been acting as an essential Bitcoin ETF for a long period of time. There's been a very well understood arbitrage that accredited investors and a lot of hedge funds have taken advantage of this get to run, which is they're able to buy at NAV, right? Buy at the net asset value of the shares in the trust, and then they can sell it after a 6-month lockup at the market rate, right? So they can essentially capture that premium. There's no premium anymore, and it's actually a discount of 14%. So, that throws a wrench if you were depending on that arbitrage, and it looks like there were billions of dollars in of capital that was depending on that arbitrage. So,
I think,
a lot of people for a loop.
The question is, when did they buy it? If they bought it 6 months ago, they're still kind of, even though they're selling, they're still making a profit because, Bitcoin's gone up a ton.
Yeah.
So that's, but the lending rate thing is super interesting. And I guess watching, what's happening with the futures curve and kind of that basis trade where the profitability kind of shrinks as the futures curve gets less steep, makes lending rates, I guess, shrink a little bit.
Yeah. So to give everyone context for this, so BlockFi, one of the largest crypto lenders by size, by all accounts, a great organization. They announced they got some attention this week because they cut their rates on Bitcoin. To be upfront, it's a relatively minor cut, right? It was a cut of about 1% that they were paying back on Bitcoin, only for a certain class. They've got different tiers of user, basically based on how much Bitcoin or ETH or whatever you're depositing. Also, some context to understand here, this is not the first time that BlockFi has adjusted their rates. The last time they adjusted it was back in April of 2020, and they actually raised rates at that point from 4.9% to 6%. But I think what's interesting to note here, the reason why we're talking about GBTC trading at a discount to NAV at the same time that we're bringing up BlockFi lowering interest rates, is I think we're just starting to understand how structurally important GBTC was to lending markets. Right. Yep. And we've talked a bunch in the past about how can these lenders, how can these 8% interest rates that you're seeing in crypto be possible, right? And it looks like one huge area or source of demand for borrow, at least on Bitcoin as an asset, right, was into this Grayscale Bitcoin Trust. And now that has, at least changed structurally, it seems like that's impacting the lending market. And you're starting to hear whispers about there being just less overall demand, borrowed demand for BTC as an asset, which I think is worth pointing out. It doesn't mean that's
a huge influx of institutions in GBTC in the underlying, like there was, that first 3 months of 2021 saw everyone rushing in. I feel like they queued up all their compliance for Jan 1, and you had that steep curve as the demand came in. Yeah. And, things consolidate after a while. So this makes a lot of sense. And now you're hitting that commoditization piece of the puzzle where, the capital has gone in. Now things are getting cheaper for everybody else. And I think that's going to cause that next wave of demand for institutional.
Yeah. I don't think this is necessarily the beginning of a trend, right? It's just worth pointing out, I think. And Matt Ballenswag, I hope I'm pronouncing that name right.
Yeah.
But he's over at Genesis. He had a great tweet thread on
Someone
this.
give that guy a raise.
Someone should give that guy a raise.
It was really solid.
It was really solid. You hear that, Michael Morrow? Gotta give our boy Matty Matty a raise.
He needs to get more active on social media too. I thought that was really.
He does. That thread took off. Yeah, it was really quite good. But it was a great just explanation of what's going on overall. And you kind of have started to see some people calling for, saying that companies like BlockFi are in trouble. There was actually a really negative campaign that was launched by a competitor. I'm not even going to name who the competitor was, but it was a pretty underhanded thing to do to BlockFi, which, again, I'll say, a great company. And yeah, I think a lot of those concerns are overblown in general. And I
Yeah.
just think this is interesting to talk about, just because it's interesting to watch, the institutional lending market in this space.
Yeah, it's super healthy that, you know, lending rates are changing and they're not just trying to, suck in as much capital as possible. It's kind of like a free market now, like where things are,
What a concept.
adjusting. I know. I mean, it was really, I think that's the most fascinating thing. Like when I look at it from a big picture perspective, the reason why institutions are getting into Bitcoin now is because there's zero yield in the market, right? In the public markets. And I think the more that capital kind of flows out from this system that's basically trapped you in no yield. Like that's what financial repression essentially does. And you're seeing it slowly seep out. We saw the first bastion to kind of do it in the first quarter. And now it's good that BlockFi exists and they can lower rates, based on supply and demand. And then once it picks up, maybe interest rates pick up as inflation picks up. And that's just like it's a fascinating cycle to watch because I'm sure this happened in the fiat system years ago, and it's happening before our eyes right now.
I completely agree. I think the yield thing is, people are starting to cotton on to this narrative, but that's a huge driver of people into digital assets in general.
Mhm.
If you look at really, mega trends, right? I actually was a consultant, so I'm scarred by that phrase, mega trends. But big trends over a long period of time. What you're seeing is interest rates are on a steady march down, and I mean it's kind of nonlinear, but for like thousands of years, actually, there's great charts on Twitter. You can see interest rates are going down, and
Mhm.
commensurate to that, you see financial assets, primarily the stock market, going up, right? But at some point, I guess there is some logical limit to how far those interest rates can really fall. And I think we're at this juncture where we're playing with the zero bound, at least on kind of U.S. Denominated interest rates, and you probably can cross that, and maybe CBDCs end up being the avenue or the tool that governments use to kind of take that final leap. But I think wonky things start to happen, and people are going to move further and further out on the risk spectrum. And I do not think that we're at the end of this cycle, or that seeing that trend play out. It feels
Yeah.
like there's more room to go, for sure.
Yeah, I think, the mass mutual thing is so underrated. Like that, them getting into digital assets is just unbelievable, especially because, you know, and they're probably one of 100 life insurance companies that need to, satisfy that liability side of their business with yield. And they can't get it. Like investing in a high yield company that's going to get annihilated from like old school 1970s inflation is you're just going to see a massive influx into digital assets is my call, but we'll see. The dollar thing could screw it up in the interim if you get like,
Yeah.
credit default cycle going on in emerging markets.
It would be great to talk to someone on the investment side of an insurance company. They're so buttoned up with compliance, I think it would be really difficult to actually do.
Hmm.
But the problem with insurance companies have liabilities that extend far out into the future, right? They understand the annuities that they need to pay out to their constituent, or their premiums, or the annuities that they need to pay out. They collect premiums. So basically, what they're trying to do is match up assets with those liabilities that they have extending into the future. Bonds are a favorite tool of insurance companies because they know exactly when they're going to receive payments extending
Hmm.
out 10 or 30 years. But now, when yields on those bonds dip to a certain level, they stop becoming a useful tool for insurance companies. So I actually have no idea how insurance companies are going about solving this problem. It looks like they're looking at Bitcoin.
Hmm.
I doubt that's the only piece of the puzzle. They probably have some weird, esoteric kind of insurance products that, Goldman is whipping up. Got a team of unhappy analysts, whip up these insurance project, these
Yeah.
insurance products. I don't know how they're solving that problem, but
Either do I. I think that's why they're kind of scared. I'd be scared if you owned, Jeff Sherman of Double Line just was like, interest rate risk is an absolutely enormous here, and if you have a book, that's priced to perfection, you're probably like, what the hell happens from here? So I agree with you. It's gonna be crazy.
those guys, we've got Bill Campbell at Double Line coming on a webinar in the next couple weeks.
Oh, nice.
So maybe we should ask him about this. He's going to be talking about CBDCs too. So I'm curious to get his take.
Yeah.
So insurance companies definitely an area to watch. The last kind of final boss, right, of real large pools of capital, sovereign wealth funds, and it looks like there actually might be some movement on that front. So during the Real Vision crypto gathering conference, which I heard was great, the founder Raoul Paul sat down with the NYDIG CEO Robbie Gutman. Robbie mentioned that some unnamed sovereign wealth funds have been approaching them about buying Bitcoin. Raoul, even more interestingly, responded that Singapore, one of the sovereign wealth funds in Singapore, which is Temasek, has been buying Bitcoin apparently from miners since 2018, which would be, I haven't seen that confirmed anywhere, so I'm not sure if that's actually, doesn't seem like that's confirmed true yet, but that would be big news. And there's some kind of evidence to back that up because GIC, which is their other sovereign wealth fund, they led an $80 million Series C investment into Anchorage, which of course digital assets financial services company. So that would be big news if,
Oh my God.
yeah,
Enormous news. That's the
enormous.
biggest news.
The biggest news. Yeah.
And
Yeah.
and how do governments regulate it at that point? Or not regulate it, but like outlaw it. If your own sovereign wealth funds or other sovereign wealth funds, as soon as you get that first mover, it's going to create like this, keeping up with the Joneses effect. I gotta imagine.
I would have to imagine too. And one of the, because this is something else we talked about with Grant Williams on this upcoming podcast, but just the fear of governments banning Bitcoin, which I still think that is the greatest underappreciated, unpriced risk in this market. We talked about back in the 30s, Executive Order 6102, the U.S. government banned gold for 40 years. For
I
40
know, I
years.
know you love that, but
I know.
here's the difference.
My eyes get wide every time. That's insane.
And
That's
I've been
crazy.
thinking about that too. But what I look at is like all these relative things, which is the innovation and job creation coming from digital assets is huge. And if you outlaw Bitcoin or whatever, any digital asset, I think that causes like massive ramifications. You have Mark Benioff investing in this stuff now. You have, Andreessen Horowitz, the people who created the internet and so many jobs. You think behind closed doors, they're going to be like, oh, hey, Elon, you own Bitcoin. By the way, it's outlawed. They need pensions to be funded. And that's the biggest thing behind all these doors is like, you know, until pensions are 100% funded, I think they are going to push crazy asset price inflation. But I don't know. We'll see. I think watching the credit markets, we just had the biggest high yield debt issuance for the first quarter ever, I think. So they're pushing this thing as much as they possibly can until inflation really hits. So,
Aren't you assuming, though, isn't implicit in that assumption that governments are actually going to do something that makes sense, which I feel like they have proven themselves not to do at key junctures like this?
that's a fair point.
Yeah, I guess it depends on how cynical you are about all this, but
Yeah.
you look at, they haven't gotten it right so far. Let's put it like
Mhm.
that. And I get it. It's the first 10 years of this asset class. It takes time. It's weird stuff. Bitcoin is a weird, esoteric, kind of miracle thing that's happened.
Mhm.
And it takes a long time for any one person's to wrap their mind around it. It takes much longer for government agencies to wrap their minds around it. So I get
Very
it.
true.
It takes a very long period of time. And I think people are still working through this right now. But at the same time, I'm still worried about it. I'm still worried about it. So
Yeah.
you
Did you
made me
see
feel a little bit better. So,
that Binance hired, I think it was one of the guys at the Financial Actions Task Force
yeah, it was retired.
recently.
Yeah.
They're all trying to like, get their inside men and women to be at these digital asset firms because they know it's an innovation, growth for the economy. And if they get stifled, what happens? Then you end up with like these mega corporations everywhere in the US that treat every person and all the labor just gets commoditized.
Well, but they hired people who I'm pretty sure they were ex FATF,
Okay.
and kind of
Yeah.
like you guys can do a little better than that. Okay, you have billions of dollars. I don't know. I want to see more star power coming out of you, Binance. Which is
Yeah.
that's what I'm.
Fair.
Yeah. Give
Yeah.
me like a current congressman or woman or senator or governor or something.
Yeah.
that would be a big
Getting
swing.
back to
But
the sovereign wealth thing though is so if they are asking about it, that Sete from Norway, that fund,
yeah.
I think that's one step removed from the Norges Bank buying it, and
Hmm.
they got to be at least talking, which is like 1.4 trillion, the big oil fund in Norway.
Yeah.
They got to be close to buying some, I'd imagine, with everything that's going on in the world and globalization kind of slowly taking receding. I'd say. I'd imagine they got to be thinking about that.
I think so too, because the one I guess there is kind of a game theory element to all of this, which is that if you ban it, if you ban crypto or make it very arduous from an innovation perspective, then you risk losing your seat at the table. So I guess at the end of the day, it really boils down to whether or not the people that are in decision making positions view this as being what the future sort of looks like, or if they think it's a fad. And I think the danger is that if you think it's a fad, then you're much more likely to ban it and say, I don't care about my seat at this table, right? This doesn't
Hmm.
appear to be a table where I even want a seat. And I think maybe that's probably the biggest risk. But, I guess that all comes down to just education and understanding. So,
Yeah. If that happens though, we're gonna end up like the Ray Dalio getting banned. We're just gonna all end up in centrally planned economies, and I don't know. I don't think that's a good thing.
no, I'm not advocating for that, not one bit.
Yeah.
That's also kind of the MMT thing as well, which that's the MMT argument, right? Which is that we can print as much money as we want. Why should we? Don't worry about taxes. The only guardrail should be when inflation pops up. The problem with that is when you then think about the mechanism of how capital gets allocated, it all comes from the government, which is
Mhm.
not, I don't think, the allocation mechanism that you want. Uh, you know, I don't know. That's the
Yeah.
free
The
market's not
problem
perfect,
is
but
the private sector was so efficient that all it did was like go to the highest returning, best ROI software companies, and then you never renovate the New York City public transit system.
that's a
You
good point.
need some sort of fiscal type thing to enhance that innovation and create, I guess, more efficient economies down the line. But there's a good balance in there somewhere.
Yeah, I think you just need a balance for this.
Yeah.
When you see Biden, pushing through these big stimulus plans, a lot of fiscal spending, I guess my reaction is kind of this seems long overdue. And one idea that's been getting bandied around or tossed around for a long time is an infrastructure bill. That to me just seems like the biggest win-win of all time, and I'm kind of curious as to why that hasn't happened. It looked like it actually might get passed under Trump, but even before his administration, people have been talking about an infrastructure bill for a long period of time. It'd be good for jobs.
Mhm.
We frankly need it. John Oliver, like a couple years ago, did some piece on how our highways are falling apart, and
Yeah. I mean, I
it
agree
seems
with
like a
all
win-win.
that stuff. I'm just afraid, knowing the government, it transforms into like some snowball effect of just, constant, checks for doing absolutely nothing. And
Yeah,
but if you can do it in the right way, hey, more power to our generation.
I agree.
And if the dollar doesn't completely implode, I guess that's a good thing too.
We don't want, yeah, we do not want that. All right, man.
Yeah.
This was good. What are you doing this weekend? You got any big plans?
Honestly, no. It's springtime here. We created a little planter out back with some tomatoes and squash, so we'll see if those grow. I've never done this
That
before.
sounds lovely.
The
Lovely.
least handy gardener person on the planet. How about you? What are you doing?
Me too. Well, in that same vein, it's fun. So I moved into a new apartment. I've got some outdoor space, rare for New York. So been thinking about how to take advantage of that. We actually almost got like a little home garden, but that's just too ambitious for me.
Uh,
I got to be honest with myself at
yeah,
this
you're
point in
still
my
in New
life.
York, dude.
I'm not ready for that. I'm not ready for that. Yeah, I'm not ready for. I'm not sure I can keep those things alive.
But hey, how did power washing go?
The power washing went great. The power washing went great. For those of you who have not seen this, I've been proudly posting on our group Slack that yeah, I moved into this apartment, inherited a pretty grimy porch. So we went out, got a power washer, day one, scrubbed that whole bad boy, and it's looking very good. The neighbors, here's the problem though. The neighbors, we blew some of the grime into their patch. They
Uh-oh.
immediately kind of came over and said, "Hey, can we borrow the power washer?" Promptly blew it right back. So now we're in a bit of a war where the muck is just going from one person's porch to the other. And I think this is a battle of determination, and I feel pretty good about it. I feel like we're gonna come out on top. But I
Nice.
did, I ordered a. See, this is how I know I'm getting older. I used to be excited. What are my plans for the weekend? I'm going to go out and do this thing. I'm excited about the furniture that I ordered, and I ordered
Oh
this
yeah.
big table so I can host dinner parties. And
Look at
it
you.
came today. It came a couple weeks early, even. So I'm just like, I'm coming out of my shoes. I'm so excited over here, and I'm looking forward. I got meetings until 5:30 today, and then I'm going to set this table up, and that's all I want to do. My big Friday
Dude,
night.
so exciting. Well, yeah.
Yeah, I
You're
know.
officially old. That and your cargo shorts.
I I don't. We gotta Evan mark this. You gotta get rid of this because I do not wear cargo shorts. I gotta stand up in my next recording here so everyone can see my because I do not. I do wear cargo shorts. I wear cargo shorts. I wear cargo shorts. I wear cargo shorts. I just don't want anyone out there thinking I'm wearing that. I used to wear cargo shorts, and I got a lot of flack for that. So you learn quickly. No cargo shorts for this guy, but
Oh yeah, me too. My wife works at Chubby's. Plug for Chubby's. And she's like, if you ever wear cargo shorts ever again, I'll burn them, and I'll burn you, and I'll leave you.
it's a dire threat. I props here. I got some chubbies a couple years ago. Like the red, white, and blue ones. I thought, sometimes when you pick out clothes, you picture yourself. I don't know what I was thinking. I was like, in a 4th of July kind of scenario, I'm gonna wear these things. Never worn them. They're still sitting in my drawer. Can't
Yeah.
get rid of them because I keep thinking when I'm gonna throw it out, I picture myself at some kind of
Yeah.
4th of July
Jumping
barbecue.
off like a lake.
Yeah, jumping off a lake. Like, what am I picturing in my head? These are
Yeah.
very, rare scenarios. Why I see this pair of, red, white, and blue chubbies.
Their marketing is
And
just that good.
yeah, I guess it is. I guess it is.
Yeah.
It's crazy. And I end up getting clothes like that, and I underspend on just, regular shirts and shorts because I'm like, I don't need any of those. But,
You
I
know
might
what?
be at a 4th of July barbecue, and then I would be sadly out of luck if I don't get this thing. So.
Last thing I'll bring up before we end this thing is, when's the next time you'll actually buy a suit?
That's a great question. I haven't bought a suit in years.
Yeah.
In years. Yeah.
Like,
Because
what do you
when would I
even need
need
one for?
when did I need that? Yeah. I don't know. Yeah.
It's going to be interesting. I
It's
feel like,
much
what
better
do
to
people
not
wear
wear
at
suits.
Blockworks events? Is it like,
That's a good question. People, it varies actually. People, the formal people, they'll have like a jacket and no tie kind of deal.
Mhm.
Like some nice slacks, so like
Okay.
business
Yeah, yeah.
slacks and like a jacket and it depends. If it's a family office, they're in like a t-shirt and shorts and flip flops.
Yeah.
Because
Gotta love it.
that's how you can spot the family office if there's like a nice event and everyone's dressed up and looking sharp, and
Mhm.
there's one guy in like flip flops or loafers and, like this ancient, polo or something, you're like, that's the family office,
Yeah, yeah.
because they do
I
not
love that.
give two shits
Yeah,
about
gotta
the
love
dress
that.
code here. Yeah. So that's a good tip for spotting them in a crowded room. All right, everyone. Thanks for tuning in to this episode of On the Margin. If you are listening to us on Apple, please make sure to give us a rating and review. Tell us what you'd like to see covered next week, because Tyler and I are always looking for suggestions of interesting stuff to talk about. If you're listening to us on YouTube or Spotify, just hit that subscribe button, and we'll see you all next week.